All right, welcome to this explainer. Today, we're diving headfirst into the absolute whirlwind that is the Origin token, or LGNS. We are going to strictly stick to the data, the charts, and the reports from our sources to figure out what exactly is happening here. Because right now, we've got a fascinating, highly volatile situation where the massive promises made by the project and the brutal reality of the market seem to be existing in two entirely different universes.
Okay, so picture this. The market is in total chaos. Investors are panicking, and the Origin project team comes out and drops this incredibly philosophical, almost bizarre statement. They actually describe the ongoing market turbulence not as a collapse, but as a visceral conflagration and a definitive purification. They're essentially telling their community, hey, to reach true greatness, the project just has to endure this final fiery trial.
But, the reality on the ground is a whole lot less poetic. While the team is waxing lyrical about a purification, the token's price actually fell off a cliff, plummeting into a really dangerous zone between $4.50 and $4.86. In fact, our sources note it bled out over 21% in just a single week. It's a bitter pill to swallow as the price action repeatedly tests these terrifyingly low support levels.
So how are we going to make sense of this massive disconnect? Well, we'll start by looking at the real-world human costs, then we'll dig into some incredibly severe fraud allegations, crunch the technical chart data, and finally we'll see what algorithmic price predictions have to say about the future.
First up, we really need to talk about the reality on the ground. Because it's easy to get lost in the numbers, but there is a very real, human toll taking place right now.
While the project is out there promising compounding wealth, everyday retail investors are quite literally watching their portfolios burn. We're seeing reports of people being absolutely devastated. There's one really sobering example of a user who was forced to liquidate a 2.5 million rupee portfolio at a massive loss, basically walking away with pennies on the dollar. It really forces you to ask, if the house is actively burning down, does it make sense to just sit in the living room and trust the process?
Which naturally brings us to the elephant in the room. Is this just a terrible bear market, or is there something deeply deceptive going on behind the scenes?
Buckle up, because an exhaustive report on Binance Square just leveled some devastating allegations. They are claiming the whole project is a multi-billion-dollar Ponzi scheme that harvested 500,000 investors. The report alleges that 82 out of their 137 smart contracts were literally copied and pasted from the infamous Plus token scam. Add to that promises of impossible returns, we're talking 1.2% daily and 79 times annual APY, all fueled by a 15-tier pyramid recruitment system. They're even accused of staging fake summits in Dubai just to create an illusion of global legitimacy.
When you look at the timeline of how this alleged scam unfolded, it reads like a financial thriller. It all started with this flashy launch in March 2024, but by early 2025, the price absolutely cratered from a supposedly manipulated peak of around $88. Then, total panic sets in by April when they allegedly locked everyone's withdrawals for 180 days and slapped on an absurd 99.99% sales tax to trap the funds. And it all seemingly culminates in May 2025 when police in Zhengzhou reportedly raided their servers, uncovering an estimated $230 million laundered through casinos in Southeast Asia.
So, keeping those intense allegations in mind, let's pivot and compare what the project is officially saying right now versus what the market is actually doing.
The disconnect here is literally mind-boggling. On one side, you have Origin loudly boasting about completing a 100 million DAI co-building goal, claiming they're fighting a revolution against legacy banks. But then you look at the market reality, and the chart is just carving out a new low every single day. Investors are scrambling for the exits, taking catastrophic losses. As a lot of market observers point out, these grand revolutionary visions often serve as nothing more than really sophisticated exit traps for the founders.
All right, let's tune out the noise for a second and just look at the raw technicals, because the charts don't care about narratives, they just show us the data.
To make sense of the charts, you have to understand that LGNS is trapped under a brutal descending trendline. Think of it like a concrete ceiling. Every single time the price tries to catch its breath and pop back up, it smacks right into this line and gets violently rejected back down. It is a textbook, suffocating downtrend.
And the overall market sentiment? It is heavily lopsided. Right now, an overwhelming 88% of technical signals are screaming a bearish warning, with only 12% leaning bullish. You just don't get much more one-sided than that in crypto.
See that number 12? That is the current fear and greed index for this token.
That means we are deep into extreme fear territory. And let's be honest, major sustainable breakouts almost never happen when the entire trading ecosystem is paralyzed by that level of fear.
Drilling down even further, out of the key indicators that traders watch, 22 are flashing bright red sell signals. And here's the kicker that makes it so tough for the bulls. Every single simple moving average, from the super fast 3-day all the way out to the 200-day, is signaling sell. It's practically a clean sweep, just an absolute tsunami of bearish momentum across every time frame.
So, what's the ultimate line in the sand right now? Well, for the bulls to survive, they absolutely need a decisive, sustained close above the $7 resistance. They have to break that trend line. But if the price gets rejected again and falls through the $6 support floor, that's it. Total victory for the bears and confirmation that the bottom could still be a long way down. Finally, let's zoom way out. What are the long-term algorithmic forecasting models actually predicting for Origin?
While the models are completely polarized, which perfectly illustrates just how insanely unpredictable this asset is right now. You've got Wallet Investor projecting a near total collapse, predicting a drop to just pennies, literally 2 cents by 2031. That would be an agonizing 99% loss. But then, almost incredibly, you look at CoinCodex, and while they see a short-term dip, their models somehow forecast a massive 202% recovery, targeting over $13 by 2030.
And it gets even wilder. If you look decades down the road, some hyper-optimistic algorithms are throwing out theoretical gains of over 3,300% by the year 2050. Now, obviously, you have to take that with a massive grain of salt. But I think it beautifully represents that tiny, desperate sliver of hope that the remaining bulls are clinging to, despite the overwhelming reality of the current crisis. So, wrapping this all up, when you take a step back and look at the multi-million-dollar fraud allegations, the utterly crushed retail portfolios, and a chart that's just drowning in bearish signals, I'll leave you to look at the source material and ask yourself one crucial question. Is this project truly undergoing a definitive purification like the founders claim, or are investors simply trapped on a sinking ship?